This asset was a 33 unit. One of the units was a single family home, which was phenomenal. Great shape. Mixes of 2s and 3 bedrooms. We love that unit mix. The unit mix is phenomenal for the area. The next step, it was not in a flood zone. And as you see what's going on with these natural disasters taking place, just to take a moment to say some, heartfelt thoughts and prayers for all the people in North Carolina that have their lives totally devastated. And some of them weren't even in flood zones. And when you're looking at underwriting deals, if the deal's in a flood zone, I'm not saying that's a deal killer. Just look at what the insurance is going to cost you. And that event does happen, it's going to be a real problem to take care of, because you're going to have a lot of damage, a lot of devastation, a lot of displaced people. So understanding that when we're looking at deals, it's not that flood zones are an absolute no, but we know they're going to be more cost prohibitive and there's more risk. It really comes down to the function of the price, remember? So understanding that. So we're looking at the unit mix we love. Love the vintage of 2008. Anything 1980s or newer for us right now that has brick, pitch roofs, we really like that. We also like the fact that the median income was really high. It was above $70,000 on this asset. Anything above $50,000 in our market, we're going to look at it. Anything below that, it's not that we're going to say no. Once again, you need to understand if you're getting it for the right price and you can add value, and then thinking about your exit strategy. Are you going to hold it for the long term in an older asset, older part of the market, lower median income, or are you going to flip it? Understanding that's important.